all, the Nifty has broken below the mark of 18,600. That was supposed to be an important support level for the market. In fact, we are trending close to the lowest point of the trading session. It's the banking stocks which are coming under pressure, and that is X of the PSU banking names, because otherwise the PSU banking names are doing definitely well. So you have Bank of Baroda, which is up 2%, PNB is up in trade, but it's the private financial names which are coming under pressure. So ICICI Bank, that one has been forming a bit of a bearish pattern on charts as well. So that's down about 1.5%. You have HDFC Bank, which is down in trade, and Axis Bank too is languishing in the red. And having said that, it seems like the broader markets too, the advanced decline ratio has worsened a tad bit, and a lot of stocks are actually now trading with a bit of a red tinge. East Strip Planners is something which is down 6%, Sarah Tree is down 4.5%, and you have Lemon Tree Hotels, which is sitting with a cut of around 4%. And in the last few minutes, there has been a cut in Piramal Pharma as well. On the gaining side, it's the public sector entities yet again. So Punjab Sind Bank has been having a terrific run of late. In fact, last week itself, it's piled on gains of around 30%. And BHEL, wherein we had the word with the management earlier, who sounded fairly confident about their order book going forward, is also seeing a bit of a positive up move. In fact, from the lowest point of the trading session, it's seen quite a bit of pullback. But talking about pullback, that's quite visible in IRB Infrastructure as well. The toll collections for the month of November have been much better than expectation, with a YY growth of around 39%, and month on month as well, we have an improvement of around 6%. We have with us Mr. Anil Yadav, the Director Investor Relations, IRB Infrastructure, to talk to us about how the demand momentum is panning out. Mr. Yadav, hi, good afternoon. Thank you so much for making time. We have been reading headlines how toll collection has been at record high across the country, and that's quite visible in your November update as well, with a growth of almost 40% when it comes to year-on-year toll collections. Do you expect this kind of run rate of around 350 to 370 crore per month likely to continue in the coming months as well?
Good afternoon. We have seen good momentum in previous months also, and we expect that this momentum will continue. And we are seeing good traction in terms of the traffic. Even if we compare with the pre-COVID level, in all the project, basically, if I will compare in November 2019 with November 2022, the toll collections are up by almost 86%.
Right, Mr. Yadav, this is Vinny joining in the conversation as well, and a good afternoon to you. And, just in terms of, obviously, how are the traffic volumes and looking like to you? Mainly, what are you seeing in terms of that?
I think in terms of the traffic, both passenger and commercial, we have seen uptake in the both passenger and commercial traffic on overall project. And this traction is continuing from past previous so many months. Since we are declaring the toll numbers on a monthly basis, we are seeing good and robust growth on backdrop of healthy traffic. And we have got around 10% tariff revision from 1st of April 2022. That is also helping us in terms of overall revenue growth.
Okay, because if I look at your earlier stated guidance, you were expecting a revenue growth of around 14 to 15%. Now, with the uptick that you are seeing in terms of the toll revenue, as well as the traffic volumes picking up, are you expecting a better growth, or do you think 14 to 15% is going to be the likely growth, given EPC business has been very volatile?
I think we have talked about 14 to 15% kind of growth on the EPC business. And EPC business, as you rightly mentioned, being lower in Q2, being a monsoon quarter. And the Ganga project, now we have got an appointed date, and that project will start contributing. There, the EPC order book is 5,500 crores. So almost 300 to 400 crores of revenue will come from the Ganga every quarter, because we have to execute over the period of 3 years. So considering that kind of run rate, I think now EPC revenue should look better in coming quarters. That should increase the overall profitability and overall revenue visibility. In fact, in the Q2 itself, we have doubled the profit as compared to Q2 of the last year. And considering the 300 to 400 crores of revenue will be coming from the Ganga, if you look at the EBITDA margin, which is around 22 to 25%, then 100 odd crores of EBITDA will getting added because of the Ganga itself. and only the taxation will be the only expenditure over there. So roughly 70 to 80 crores of that will add to the bottom line. So considering that the coming quarter looks quite robust, and in terms of the profitability, as we have talked at the beginning of the year, that because of the interest saving, whatever loan we have paid, roughly 3,300 crores, and on backdrop of the good revenue traction, we should be growing more than double profit in this year as we have done in the last year.